Back in 2020, all the big institutions and investors were buying semiconductor stocks, knowing that the economic lockdowns were going to create bottlenecks in the supply chain for all these chips and semiconductors. 5 years later, everybody's being fed this AI will replace you narrative as if it's the entire future. And to me, it sounds a lot like the 1998 internet revolution. Now, it's almost like they want you to buy what they have to sell at an immense profit. So in today's video, we're going to cover why this might not be the best decision for your portfolio and what the tail risks are for this quote-unquote AI bubble. So that being said, my name is Gabriel Osorio Matsili. Welcome to Investor Brew, and I'll see you on the screen. All right, we're gonna get into today's video titled AI Bubble. And before we get there, as always, we have some housekeeping items to go over. And this one is coming from our growth equity segment inside our deal room. And all the members clocked in a 40% plus return in shares of Telecom Argentina. If you saw the news last week, Scott Bessent bailed out the Argentinian government with $20 billion. And they also re-elected President Milei for the midterms. Now, this stock, we had a price target or evaluation for $12.38 a share. And it ended up rallying really close to it. Now, we pitched this stock just about a month ago at $7 a share, which was about a 45% return at the end of the week. This play also came along Intuitive Surgical, ticker symbol ISRG. We pitched that stock at $433 a share, and the catalyst was very clearly spelled out as earnings. After they reported, we ended up exiting at $560 a share for just over 20% return. All told, over the past month, our deal room members got a return of just under 70%. I invite you to get 7 days free in the link in our bio so you can check out everything that we talked about in there, get the Excel models, all the financial breakdowns and thesis so that you can generate returns like this for the next coming weeks. Now with that, let's get into today's video. So this might be the last inning for the AI bubble, the AI speculation or quote unquote revolution, right? And we haven't seen many bears come in outside of the FinTwit space or any sort of the retail mainstream media, right? Until this guy came along. His name is Jay Goldberg. He's a Wall Street analyst and he's one of the few NVIDIA stock bears out there. And he actually makes a very good point in his thesis. It's essentially based on the fact that we have built too much AI infrastructure without knowing if the demand is going to follow through. And he compares this to the ramp up in internet infrastructure of 1998 to 2000, which failed to deliver on the user traffic expectations, sending Cisco crashing. Now back then, Cisco was the biggest company on earth. It was the one delivering all of the growth expectations and forecasts were as bullish as ever. When this expectation didn't come through, the stock crashed down to levels that haven't been seen in over 2 decades. Now, Goldberg says NVIDIA could be the new Cisco. Is he right? We don't know yet, so let's dig into it. Now, if anything, there could be a crash, but it's unlikely to be in NVIDIA, at least for now. If anything, I think Taiwan Semiconductor holds the AI tail risk itself. And today, we'll cover why this is through the tools I give you for free inside our free 5-day email crash course. You could grab a spot in this course in the link below the video. You'll get the first lesson in your inbox tomorrow, okay? So now specifically, the tools I will be using today are covered in day 4. So make sure you grab your copy, sign up for the course, and save it for later because it'll come in handy. Now, we have a signal coming out of market behavior. And right now it's coming from the SMH ETF, which covers semiconductors. You can see that in white. It's now trading at all-time highs without any issues. But then you see the orange line, which is the KRE ETF, the banking or regional banking ETF, and it's going down into correction territory. And if you watch your last video, this has to do with a potential credit and liquidity crisis going on right now in the United States. Now that being said, we could deviate or separate the two price behaviors into one single narrative. The market is going up because of AI, because of the investment in infrastructure that is happening now, driving up the insanely high EPS expectations. Yet the real economy, which you can see it through the banks, isn't really following through. So the market isn't really believing that the economic growth that's expected is going to come in as a realization. So that creates an issue. Now, the expectations, as this point brings us to, are too high. And you can see that Taiwan Semiconductor stock right now is trading near all-time highs. But there's a real warning happening now. And as you can see, the volume profile in turquoise has been accumulating some volume as of the past couple of weeks, right? And the same thing happened down here below at the $227 to $240 a share range, but that was likely the outcome of accumulation buying. Now, we have no idea yet whether this new accumulation is buyers coming in, accumulating for a new breakout, or sellers stepping in, dumping the stock. So that is our homework right now. We have to figure out what is going on. And I would believe that is option number 2, the sellers coming in, dumping the stock, and even going in short. And we could suggest that is the option because the short interest for Taiwan Semiconductor has now hit an all-time high of $9 billion after a 19.6% increase over the past month alone. So it looks like sentiment is starting to shift for Taiwan Semiconductor, and there must be a reason why. So let's go ahead and cover it through a quick comparison as of the comps for Taiwan Semiconductor, right? So we have NVIDIA, we have Advanced Micro Devices, we have Intel, Taiwan Semi, of course, and then Broadcom. And I want to highlight one single metric that is going to be useful for you to measure whether there is ongoing demand and ongoing future demand for chips to come into the market, and that is capacity, right? So as of the past 12 months, we can see that Intel is operating at 30% capacity. Now, keep in mind, Intel, even though it has rallied over the past few weeks, and even though the government is investing into Intel with even a new NVIDIA partnership with it, this company is falling behind on the chip manufacturing technology and anything that is below 7 nanometers, right? So this company is falling behind on innovation, on the demands of the new chips that is coming through the economy. Yet, Taiwan Semiconductor is operating at a similar capacity range of 40%. Now, you mean to tell me that Taiwan Semiconductor, one of the biggest manufacturers on earth, and the one that holds the most market share for all the chips below 7 nanometers, is operating at the same level of Intel, a company that is a fraction of the size? It doesn't make sense, right? So to me, you can see that NVIDIA, one of the hottest stocks in the sector, and Advanced Micro Devices, they're operating at 680 and 440% capacity. So the difference now is Taiwan Semiconductor provides all the wafer manufacturing equipment, all the raw material for NVIDIA and AMD to produce their chips. So the difference, right, the delta between capacity utilization, to me, might mean that after this inventory run in NVIDIA and AMD, there aren't any new orders coming through for Taiwan to produce the raw materials that go into these companies. So in other words, after this inventory turnover is through, there isn't much to sustain EPS growth down the line. And that is exactly where the tail risk comes in the semiconductor and AI space. More than that, we can see that Taiwan Semi has one of the lowest free cash flow yields in the sector at only 18%, save for Advanced Micro Devices. But when we look at Broadcom and NVIDIA, I mean, it's pretty low. So to me, that also signals the potential for slower free cash flow conversion from earnings, slower inventory turns, and slower investment into new orders. So it's all beginning to make sense on the fundamental side. So let's go ahead and check whether markets are expressing this view and whether they know what's happening. And to me, it looks like they do. Let me explain. So Taiwan Semiconductor, even though it's one of the biggest companies in the sector, now trades at a forward PE of 26.5 times, which is way below the sector average of 38.9. Now, if you look at the EPS growth projections moving forward in the next 12 months, they're only at 13.3%, which is also below the average of 104%. And when you take out Intel, which is 385, we can normalize a median of 39%. So it is still almost a third of the industry median. And that makes sense as to why the market is discounting the stock's valuation moving forward. Now, when we look further into the stock, we could check out what it is doing currently as far as price action goes and what we like to call our technical analysis, right? We're not going to be doing chart patterns. We're not going to be teaching you double tops, triple tops, head and shoulders. We don't think that's valuable in the way that we trade. You might find it valuable. It might work for you. If it does, kudos to you, more power to you. But this is what we use. We want to look at what volatility has been doing and what volume has been doing. And as you can see for Taiwan Semiconductor, volume has been contracting since October 16th, and volatility has been also contracting after October 22nd, which also marks the all-time high that we saw in the stock. So essentially, two things happened at the top. We saw a volatility compression as a result of volume compression. So there wasn't any follow through in new buyers to break the stock out of the 52-week high, which is also the all-time high. And to me, that means two things. If there's no interest, otherwise known as volume, it makes sense that volatility is going to contract, but that also sets up the stock for a volatility expansion or a breakout. And usually when that happens, bearish sentiment is realized in the price action. So let's look at another metric here, which is the historical volatility in Taiwan Semiconductor. We can now expect a 7% to 7.5% move once the volatility starts to break out again, which could be earnings, it could be any announcement from the industry itself, it could be an associated stock's earnings, right? So it could be another company in the semi space. And right now, you can see the volatility measures are toward the bottom of the range. So therefore, we are expecting that volatility breakout to come in sooner rather than later. And where we expect it is, again, that 7 to 7.5% move. But that would only be the beginning. That would get Taiwan Semiconductor really, really close to correction territory of 10% off the 52-week highs. But honestly, my main target would be a 20% sell-off, right? Because that 20% sell-off would be ideal for that bear market territory to come into play and start reflecting the fundamentals that we just covered as far as capacity utilization and as far as the lowering free cash flow yields that we just saw. Now, keeping that in mind, that target would land around $250 a share, and the stock is now trading at $298 a share. So you could do the math and you could see where the opportunity might come from, as this has now become a reasonable short candidate for a position. Now, again, I want to remind you that when everybody starts sharing the same narrative, it's usually time to start getting out. And I've heard many people say around the US, around Europe, and around the social media space saying that AI is going to replace X amount of jobs, AI is doing this, AI is doing that. And when everybody seems to know for sure what's going to happen in the hottest thing in the market, then you can probably guess it's time to get out. Because if they want you to know, it means that they're trying to get out of what they already bought, as I mentioned in the beginning, since 2020. Now, if you found this breakdown valuable and the methods that we use to spot both long and short opportunities, then I invite you again to check out our free 5-day email course. The link is going to be below this video, where you will have access to how we come up with macroeconomic biases, how to select the right industries that are carrying that bias forward, whether it's an expansion or contraction, followed by how to do the stock picking process through valuation multiples, growth ranges, and comps analysis. This way, you can land yourself into companies that are expanding in EPS or contracting and really profit off of that delta. Last but not least, you'll learn how to hedge your position so that any given day, you can increase or decrease your risk according to how your macro view and your industry view changes. So that being said, I do hope you got a lot of value out of this breakdown, and now you're beginning to understand where the risks are coming from in this quote unquote AI bubble. It's been an absolute pleasure, and I'll see you in the next one.